This is a first large internet company which is going public. Now typically when you look at an internet company of the nature of Zomato, the business is not making money, which means there is no profit after tax. So then what is the excitement about buying Zomato? Well, it's very simple that internet companies are the high growth companies of this decade. They're growing at 50-60%. The big picture for the food delivery business is very simple to understand, that you got two large players, Swiggy and Zomato. Both of them have burned about $4 to $5 billion in order to reach and create this kind of a network where now their cash burns are coming down and they have a sizable market share. If one looks at the global comparison, there's a long list there as to companies which are in the parallel business, what kind of market cap they are currently commanding. And the other mega trend which I see is that, Indians like you and me, we want to experience more cuisine. We want to experience more cuisine sitting at the comfort of home. So the dining industry is getting contracted. As QSR is not going to grow, it is getting contracted. However, the entire delivery business is growing. So the big picture, I guess, Aisha, for a business like Zomato, I think is very formidable. Now, will you make money in 6 to 12 months? That's very difficult, Aisha, to judge, because I definitely see that there is going to be a niche premium. Folks who understand how to invest in high growth companies, they would lap up Zomato. You heard from somebody like S. Naren, who is the conservative guy who's always looked at book value and P multiples and dividend yield. Folks like him are now saying, we need to understand how to value some of these internet companies, and because there are a lot of internet companies which are coming. So what am I trying to imply here and communicate to our viewers? Well, I'm saying that Zomato is a high growth business and not many high growth businesses are here. But when you're typically buying a high growth business, you have to extend your time horizon, because you will only make money in a stock like Zomato when you have a minimum 3-year time frame. Because if the growth of 50-60% continue, and if the trajectory of cash burn rate it comes down, then a business like Zomato is really going to make money. This is not like you're going to get profit after tax, or you can predict your cash flow immediately. Now you could ask yourself, is that what could go wrong, Aisha? What could go wrong? Well, if Amazon comes in, if Jio decides to be in the same business. So those are the fear factors. But right now, if you have a 2 to 3 year time frame, if you're not one of those folks who are playing it for the IPO pop might happen because of the scarcity premium. But for a medium term investor who says, look, I can look beyond FY22 and FY23, but I know that this business is the big picture business I want to buy in my portfolio, because delivery and food delivery and logistics is what I think is going to be the theme for this decade, then Zomato fits in beautifully.